What is good, Tesla family? It's Ray J back with another video, and in this one, I'm going to be talking about the one and only Tesla stock, what you should be looking out for the future of this company. I'm also going to break down something Elon Musk said in the past involving a recession that could be associated with a bit of a correction or even a crash in the markets. Now, is that 100% guaranteed? The answer is no, but as of right now, the trend does look a little bit bearish, and it's very possible for the market to take a bit of a hit. So I am going to show you how this may affect Tesla and how this could actually cause the price to move for the upcoming months, maybe for the rest of the year, based off many macroeconomic factors. Now, before I break this down, before I talk about how Tesla's share price could move for the future, I do have to mention a couple of things real quick. The first thing is I'm not a financial planner, so please don't take this as financial advice. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, whether it's $1 or $100, it's up to you. You're guaranteed 5 free stocks, each worth up to $2,000, and you could always sell those 5 free stocks for cash and buy some Tesla shares for free, because these dips, in my opinion, are very good buying opportunities for the long-term future, and I do believe it has the potential to really recover from the losses we're seeing right now. Now, before we actually now talk about what's happening to Tesla, we have to look at the macroeconomic lens that we are in. And there has been a lot of talk, at least recently, about the fact that we may be in a recession and it may hit the US economy this year, right? People from Wall Street, Jerome Powell has even talked about how it's a possibility, but he doesn't talk much about that because he doesn't want us to get rug pulled, so to speak. I think he's trying to not cause us to crash as hard as we could have. But at the end of the day, some things are inevitable. So we really want to actually break this down a little bit. So go back right here. This was, I think, earlier this year. Somebody asked Elon Musk, when do you think the next recession will be? And then Elon Musk responded. This is what Elon Musk said. Predicting macroeconomics is challenging. That is true, to say the least. My gut feeling is maybe around spring or summer of 2022, but not later than 2023. Now, in the past, I made a prediction in some of my older videos. I thought a recession could come, and if it came, it would happen by around Q3 of 2022. That's what my prediction was. It's similar to Elon Musk's, and based off what he's saying, this was just his prediction: spring or summer 2023. Excuse me, but no later than 2000. I'm sorry, spring or summer of 2022, but no later than 2023. Right. So the problem is, in order for us to determine we're in recession, we have to be in the recession already and probably starting to recover, you know, by the time we figure it out, or we could truly make the claim that we are in one or were in one. So what does that mean? Let's put this in English. We have a measure known as the GDP that measures our gross domestic product. It shows the output of the country in a way. So when the GDP is negative in a quarter, we're going to have a negative GDP for the quarter. But when you have two in a row, two negative quarters in a row in our GDP, that is the most commonly used or defined ways of defining a recession. So in that case, what's happening right now? Q1 of 2022 was negative. We had a negative GDP in Q1. So Q2's data will come out in a couple of months. So we won't truly know until the data comes out. I mean, we can maybe make some guesses, we can make some estimates and deductions, but we can't 100% confirm it until the data comes out. So by the time we find out, we're probably going to be in a bit of a recovery phase from there, because generally what happens in economies, recessions are kind of slow. They not slow, they're short. That's what I'm trying to say. They're short. They don't last as long as recoveries, but the effects of them are what can have their toll. So when it comes to the economy, here's what I'm trying to talk about. We're seeing the SPY take a bit of a hit. Well, if you go back right here, there's actually other data that suggests that things may not be as bad as some people make it seem, because UBS is predicting that we already reached the peak of the CPI report because Powell is now raising the federal funds rates. So CPI data, this is just one of the many inflationary measures. Obviously, it's not perfect, but it's widely accepted. when CPI comes out next week on the 11th of May, we want it to be below 8.5%. That would be an indicator that, oh yeah, inflation is starting to flatten. In the words of Jerome Powell, things are not like super, super horrible. They're pretty bad, but not extremely horrible. And we're starting to see a bit of a recovery. So hopefully we start to see recession cool down, especially after the fact that they just raised the federal funds rates. But they just raised it this month, right? We're gonna get the data for April. So hopefully the 25 basis point rate hike had somewhat of an effect. I really hope so. And if that's the case, this means that things won't be as bad for the markets because the Fed is raising the federal funds rate to address these issues. And if you look at this downward trend in the rates, things do look like they're not going to be as severe as times in the past. So what that means is inflation is not going to hit like double digits, hopefully, if we start to see it dropping based off this. If it does reach double digits, excuse me, the Fed would have to be a lot more hawkish. And when the Fed is hawkish, it's essentially going to rug pull the markets. So is the Fed going to do this? We'd have to wait and see what comes from these reports. This is going to be one of the most important CPI reports for the entire year. We want to see inflation drop down. We want to see that happen. But if that's not the case, right, let's just say, for instance, CPI is kind of the same. Maybe it's even going higher. Let's just say that the Fed is forced to become a lot more hawkish. They raise the funds rate. They make interest rates higher. It causes mortgages to actually get higher. It slows down real estate in a way. If that were to happen, it's a possibility. Is it a guarantee? No. It's not a guarantee it's going to be extremely horrible. It could be pretty bad, but it's not a guarantee. But if that were to happen, the SPY is going to drop. The NASDAQ is going to drop a little bit more, especially if we do find out we hit a recession. The market's going to be fearful. And if you do think that the red we saw in the SPY is the bottom, as of right now, it does not look like it's the bottom just yet. It does look like we have more room to drop if we break these support levels. So it is very possible that the SPY could hit that 380 mark if things get pretty bad. And after that, we could have a bit of a sell-off until we find our support or until things get a lot better. And an example of things that could really cool us off, like I said, is CPI going down, which would be a better sign for the stock market. So we're just going to have to wait and see. So what's going to happen to Tesla? Tesla dropping depends on how much the NASDAQ and the SPY drop. But one of the things that has been used to actually encompass the way Tesla moves is a Wyckoff accumulation schematic. So let me go back. Let's go back to like 2021, I think. I think that was a really good time to use this. Right here, there were many instances where we saw cycles that looked very similar. I'm sorry, let me use this part of 2021, sorry. So right here, what you'll notice in this chart is there were many instances where Tesla was following this Wyckofian schematic. So we had the point of support, bounce off. We drop to the selling climax. We have an automatic reaction, sell test. Then we didn't really see the sell test in phase B. This was probably it, but it was a little bit different where this one was that. We pushed up, then we pushed down to the spring, right? And this recovery phase was actually longer than this drop phase. But it took many months for us to come back to these levels we were at. And it didn't come until closer to the end of the year. So this could be an indicator, right? An indicator of what may end up coming for Tesla. Going like this, if we were to use a Wyckoff accumulation schematic, the market could do something like this. And this is a possibility. Let's say the market is not done with this whole crash. There could be indicators that Tesla is going to have a little bit more room to drop. Am I guaranteeing this? No. But it's something you should be prepared for. I'm going to show you what you should be thinking of and doing as an investor after I draw this out for you. So what could happen is Tesla has some moments of relief. Maybe into next week we push up just a little bit, but then we slowly start to drop down kind of like this. What could end up happening is we reach the spring phase. It's possible for us to drop just like this. It's a possibility. Okay? Am I guaranteeing this? No, it's a possibility. Then we get a reversal, and the reversal is very gradual, very slow, and until we get to the next year, 2023, that's where things become much, much more bullish and this thing starts pushing to those really, really high numbers like that. And, anyways, let's just finish this like that. The thing to remember from this is there is going to be a very fast recovery when the time comes. Look at how quickly this thing could run. We already know that. But if you're a Tesla investor, how should you be looking at this? Okay, and here's my answer. If you're invested in Tesla, you won't see this as horrible. You will see this as a very, very good opportunity because this is essentially reflecting what institutions are doing. Institutions like to drop company prices, and I'm not going to get into manipulation or anything like that. I mean, it's real. It's real. But they do this so they can accumulate shares at these low levels. Then they let these things ride. They buy calls. Institutions battle each other all the time. Market makers play a massive role in allowing or even causing sometimes these gamma squeezes. So for Tesla's case, one of the things that's crazy about Tesla is how insane the options flow is. And there could be an announcement of a stock split. Maybe the announcement of the stock split in a few months could be the thing that sets this thing off to a bullish rally. Maybe. But what I'm trying to say is the first thing to remember is if you're a long term investor, don't worry whatsoever. You have the opportunity to buy more Tesla shares for much cheaper prices because I believe there will be a quick recovery. The second thing to be talking about is if you're a trader, if you're swing trading, if you're day trading, this is another opportunity because look, we're not going to fall in a straight line. There's going to be like a down day, then we're up, I don't know, 5%, then we're down like 2%, then 5%, then 6%, we're down, 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 then all of a sudden we're up 4%, then we're down and up and down, right? Based off the volatility that this thing has, it offers more opportunities for investors. So this could be a good time if you're holding a lot of shares to start selling some covered calls and working on strategies like that. I definitely recommend reading into what covered calls are because that's another topic for another video. They're very comprehensive. Or you can start, I don't know, buying puts if you want. It's really up to you. I know some people talk about how they're against that. I understand that. I respect that. But anyone could do what they want with their money. Or you could actually buy a lot of calls at these low levels, at lots of dips, and start trading options on a day to day basis. That's another way you can make money off of this play. Or you could look at other plays too. But it just goes to show there's always an opportunity. Don't look at the market. Don't look at Tesla as bad or good. Don't look at moments as bad or good, especially if you see this thing in the red. I don't see it as bad or good. I see opportunities every day to either trade, to buy more shares. You have to be optimistic because remember what Kathy Wood said. She believes Tesla is going to be worth $4,600 by 2026 or even higher. So she's still very, very bullish. I'm insanely bullish too. You know, if this thing drops, we could have another massive gamma squeeze. It offers more opportunities. When it drops, you could buy more shares for cheap. It's an amazing opportunity. Imagine this thing actually does, or imagine that Kathy Wood is half right. Let's just pretend she's half right. Let's say Tesla only goes to like 2,500 by 2026, hypothetically. If this thing drops to the 700s, 600s, that is one hell of a deal because in a few years, you'll easily 4 or 5x your money just by letting it sit there. That's incredible. And that's even if Kathy Wood's halfway off. And she's definitely not that far off, in my opinion. In fact, she may be underestimating it. Tesla may be worth 5,000 by the year 2026, 6,000, much, much, much higher. But that's a topic for another day. This is all just hypothetical. And I wanted to provide some insight on how you should view this company, how you should view things, because nothing in the market is really good or bad. Nothing in the market is going to hurt us. The market is a place of opportunity, and you have to remain optimistic and set your emotions aside to be an intelligent investor. With that out of the way, I hope you guys found value in this video. I wish the best for each and every one of you. Stay strong, never quit. Tesla is going to recover, in my opinion, based off the data I'm seeing, based off their growth, and I'm still incredibly bullish. So thank you, Tesla to the moon, and peace out.